What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are going through how to basically chart a stock, how I want to look at it, how I map it out from start to finish, the basics. It was requested by one of my viewers on YouTube and After Hours, so we're going to make the video here. So if you are excited for today's video or just curious to see how I chart stocks, make sure you like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. As you can see, this is an example of what my charts look like. This is on the Webull platform. Now, I like using Webull more than Robinhood, for example. TradingView is a good one as well, but I like Webull because it's on my desktop. I can click right into it. I can join right in, and I can start charting right away. And honestly, Webull has been pretty cool. And since if you have a brokerage account through them, you get access to all these features. You have to pay for it, just like unlike TradingView, we got to pay for a lot of things, stuff like that. So as you can see here are my different levels of a stock like Chipotle, for example, and you can see how it kind of seems to be following these levels pretty nicely. You know, it came up and it retested about $58, broke down through, came down about 41, broke down about 38. And now it's hopefully going to have this kind of V-shaped recovery. Again, who knows with this market and how crazy it is. Another good one that I've charted out here, honestly, you can look at it in the weekly chart, very, very similar ideas here. You can see the nice little support we would have had at 48, and then kind of broke through. And the hope and the goal here for me would be to buy a leap option to have it come up to at least $48 or so, because that was that previous support. Now it should hopefully go up there as a resistance check. TradingView, same thing, or not TradingView, Trade Desk, I should say. Again, had a nice double bottom here based off of my levels from my charts here. And, you know, now we're looking for a V-shaped recovery. And I know it looks very, very complicated at first, but to me, this is all I have on my charts on Webull, is just these levels of potential support and potential resistance. No indicators. Volume is there definitely for sure to kind of help see what's going on with volume in these candles here. But no indicators. Yes, there are indicators up here. But, you know, I mean, these make it look very, very complicated to a lot of people here. So I don't like to do those as much. Just looking at the charts here. And what we'll basically do is kind of look to see. I'm going to go through my watch list and see if I can find a stock that doesn't have the charts laid out here right now. We'll kind of take a look and see. Like for example, like UROY, uranium, which is, you know, is the big energy sector right now with nuclear energy and stuff like that, has had a big rally up here. And this would be an example, and I'll do a couple examples about how I would chart a stock like this. Now, what I like to do is I like to do my Fibonacci retracement levels. Now, I do my Fibonacci retracement levels, but I don't do just one. I actually do three. The reason why I'm looking at doing three is because three kind of shows me more of if the fib levels at different time periods line up, that usually means there's probably some very good conviction at those certain levels. So again, if you think about, for example, back to my positions here, Trade Desk was had quite a few fib levels lined up between $46 and $40, something like that. So if it comes down here, you got a lot of, I feel like, support here, a lot of conviction, because there's a lot of, you know, validation here, because multiple fib levels I drew over the last, you know, couple of years, going from the last couple of years till recent, they still line up about this level right here, which again gives me the conviction that, hey, our next, you know, support is down around the $40 mark or so. So getting around $40 definitely helps out. Another one that again was Chipotle. Chipotle had a multiples between 41 and 39 as well. So now it's in that kind of range here. And again, these two levels both lined up very, very nicely here. So we got about that $48, $49. Again, that was support, broke through. Now it's going to be resistance. So we'll see if it comes back up here. And I like just doing the fib levels. Is just support and resistance. It makes my life a lot easier here. So I go at the weekly chart first. So I'm looking at the weekly chart. I'm looking at this chart for, you know, uranium, for example, here. I'm kind of looking to see where we have these kind of retracement periods. Now, obviously, the bigger the retracements, the more, you know, of an impact it might have for levels here. So it's kind of based off of what your preference is, usually as a trader. Now, when I'm looking at these here, you can draw as many as you want. As you can see, it's had a lot of pullbacks here. So pullback once, pullback twice, three. Like it always has that kind of pullback here. So you can kind of base it however you want. I'll probably do one from the highest peak right here down to here, then here down to here, and then one more time. So I'm probably looking at 3 fib levels here just because anything more than 3 for me might be a little more confusing. And so I'm going to go to my Fibonacci retracement as we'll see here. Now, what I like to do is, again, I remember the high from the weekly candle here, which is 595. And I'm going to go down until it had that nice low, because then we had a pivot retracement back up to the upside. So this will be my first Fibonacci retracement line that I have made. And again, you could use only one if you want to. Again, you can see it actually has gone up to that level right here, the 61.8%, which is that golden ratio. A lot of people love the 50%, same thing. So you kind of can see that we're actually in that kind of period right now at the time we're recording this almost. And we also had another retracement back up to here as well. So it does respect the fib levels. This is just one Fibonacci retracement that was drawn. Now, I believe you can also edit the settings here. I always do extend both ways. I think defaults it to the right side or to the left. I have to go both ways because it shows the levels on from the beginning till the end, not just to the right. So that's what I like to do here for my fib levels here. And I like to, A, make the lines a little bit thicker. And B, sometimes I like to make little dotted lines here for like the initial one that I make, and then I kind of go off of it from there. But as you can see here, it's actually kind of respecting these levels here. $4.68 right here. You had a lot of support right here, then it broke down, then it came to support again, then it broke down. You can kind of see like just from this one Fibonacci retracement that was drawn that we actually can see, you know, some pretty good support and resistance levels from uranium, right? And again, this is on the weekly chart here because longer time periods show better trends for a lot of us. So that would be my first Fibonacci retracement level. Now, the next one here, and again, I only did this one because it had a big pullback and then a big recovery afterwards. So it's a nice lot amount of volume that was happening here. My next one I'm looking at here is going to be going from the next, weekly high here, all the way down to basically when it started to get that V shape again down here. Now, what I like to do again is make it a different color also, so that way I can kind of see if these different levels are actually going to line up. As you can see with the purple one that is through here, we have that nice little, resistance point right here. And again, it came down, had a little bit more support here, kind of broke down. Now we're back up here again. And again, what this is really doing is just making me see what my levels are. And if you look at how we extended both ways and why, it had a nice touch point here on a weekly candle right over here at 378. So this gives me some good ideas about where to map things out here, where uranium could be possibly going, for example. Obviously, with where we're at right now, who the heck really knows? And my last one that I'll be looking at drawing here would be probably from this one. I could go from here again, but it already has that kind of like confirmation right here. So I'm going to go from this candle down to this one. So again, I'm looking for 3 different swings, from swing highs to swing lows. If you want to make this one, a little bit more of a dotted line, if you want to do it that way, if you want to. I usually do mine as just 2 solid and then 1 dotted, so I kind of get an idea behind it. And now it looks obviously a little bit more chaotic. That's all right. And as you take a look at the yellow one here, look at this yellow one, it actually shows you that it has another support or a nice little resistance line right here, and then it broke through. So this is my way of leveling this kind of stock on the weekly time frame. Now, what does this tell me? Well, now I can go down into the lower time frames to see what's going on. And take a look here at the more recent time periods here. We had this kind of, resistance at 312, support at 274, broke right through, a little bit of a consolidation here. And it allows me to kind of see, okay, we have some consolidation happening right here. If uranium breaks down below this line here, you're looking back down to 378-ish. And if it doesn't, you might be looking at maybe up to $5 potentially as you go. And again, it just gives you the different levels of how you can look at maybe doing a long-term potential swing here. And again, what's really interesting is if you look at all the levels back here, look at these support and resistance lines, and it follows the levels very, very nicely. Again, you could draw more fibs if you want. You could do less fibs if you want. It's kind of your choice. But the fact that we had this amazing, like almost perfect touch point from this very, very early stage Fibonacci level that we did way, 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 way back over here. Went too far back. This fib level right here from back in November and December of 2021 still has a nice touch point right here in September of this year. So 3 years later. So I start off with the weekly charts and I kind of go from there. Again, what I'm looking at now as I'm looking at this kind of stock here is that we are probably could be looking at a retest first here because we broke through it. We didn't retest at the 61.8 fib level right here. So chances are we're probably going to maybe see a little bit of a pullback here as a result. That's just my 2 cents. Now, that's how I kind of look at different charts here. So all these different charts that you will see here, they all do a very similar idea. So again, here's my chart for LAES, for example. We did with Grab Holdings as well, and Grab Holdings has quite a little bit here, as you can see here, based off of what we're looking for. I did with Rich Tech Robotics, which with the newer trading stocks, it might not be as easy, but taking a look at this one, right? I drew a fib level from here down to here, and it came right up to that purple resistance line there on my Fibonacci levels. Now, it does come in, I believe, with a lot more. I only have the major ones are 0, 51, 50, 61.8, and then all the extended ones afterwards as a result. That's just kind of what I like to do. I thought I had another company that I didn't chart it out yet. Let me see if I can find it for you guys. Obviously, we can do with American Airlines because it's one that I actually didn't do more recently with. So taking a look at, say, like a company like American Airlines, for example, we can take a look and see where we have some pullbacks here, right? So, and you can go all the way back to like 2008 if you really want to, where it was at 61 and it pulled back down to $4 if you want to. That's the financial housing market crisis there you could look at. You could do it that way. You can go more recent data if you want to. So you can go from 2018 down to, pandemic 2020, then pull that down again. There's a lot of different ways you could do these kind of different fib levels here based on the stocks that we're looking for. So for example here, if I wanted to look at, say, American Airlines, I would like to do a chart based back on 2007. Just to kind of get an idea to see what was going on back in 2007 and the housing market crisis and all that all that kind of stuff before. So we'll do a nice little fib level from the high to the low, had a little bit of support here, and you can kind of see, again, it kind of has a little bit of, conviction here, as you might possibly notice. Now I'm seeing another pullback here around 2018. So we're looking at $54 down to about $8.25. We'll do a different color. Keep it a thickness level here. And you can see that these kind of things line up here, right? So these lined up like $30 or so. So it kind of gives me a little bit of an indication. Now, the problem that we're going to be looking at here is that ever since, after the pandemic, American Airlines has kind of been not doing too much. But take a look at this, though. Here's my nice little level. Oh, we got a nice little bounce right at about $8.50, almost down to the penny of my purple one from before. So now I'm looking at a more recent, weekly level here for these fibs here. So I'm going to go basically to right about the high right here, the candle wick high for this last one. Oh, this one's actually the high. And all the way down to about that 850 mark. Again, go into yellow, make it a thicker line here. And you can kind of get an idea to see, like, hey, look, it comes back up in this little region right here, then it retraces back down. You can go into the daily chart now and take a look and see if it does a little bit better. Obviously, American Airlines has been absolutely slaughtered recently, but what you're noticing is that, again, you have this kind of lineup between 850 and 825. So if American Airlines, you set a notification, say, hey, go to 850, I'm buying up shares, you buy up shares around $8.50. There's all these different ways you really look at charting it. If it's a newer trading stock that's just listed recently, maybe the dailies are better in this case. ARCAT is a nice one to take a look at because this one's had a huge ride up here as of recently. And what you can see is you can kind of guess and look at what you think are some severe pullbacks on the weekly chart, for example. We had a pullback right here. This is a big pullback here. This one seems like a little bit of a pullback, maybe a little bit of a consolidation here. And we can go all the way back to, say, these are stock splits for sure. Never mind. I don't want to do RCAT or RedCat right now because that's going to be stock splits. But I do the same thing with Mobileye. We do with Serb Robotics. One of the more recent ones I've done it with is SoundHound AI, and it's done very, very well in terms of respecting the levels. Usually for SoundHound AI, for example, as you can see here. And again, this is just a way to start to indicate where you might want to enter a position, right? Lyft to be a good one because there's no stock splits here, I don't believe. Let's take a look at Lyft. Here's another example here. So Lyft, maybe did have a stock split. Let me see. No stock splits. Wow. Just was that much at market open. Wow. Or when it went up right before pandemic times. Amazing. So I might be looking at saying, hey, doing one from here to here, one from here to here, and then one from here down to here. Kind of giving you guys 3 different levels here, right? So first fib level, again, going way, way high up. Is it ever going to go to $86 again? Who in the heck actually knows with this market? But it creates a nice, starting point for the big levels back when it first IPO'd. Okay, then we're looking at, okay, a more recent one. Here's my swing high here down to 785. We can go down to that one. And again, this is all I'm doing. I'm not doing any indicators. I'm not doing anything crazy. I start with a basic chart. I go with the weekly first, and then I start fibbing down from there. And then once you do that, it allows you to kind of see some different supports and resistance levels here. And then my last one I'm probably looking at could either be from here down to here or from here down to maybe like here, for example. Again, this is on the weekly time frame, so you're not going to maybe see much pattern right now. But as you can take a look and see, actually, we are actually at a critical point of about $20 or so on the weekly. And you can see the blue and the yellow kind of line up around that $15 mark here. And it looks like it might be some pretty decent support. And let's take a look and see what happened recently as a result. Let's take a look. So again, we have a little bit of consolidation around here, which is really, really nice. Again, these are not the exact support and resistance. It's not going to come down to 1488 on the dot here, but something in the region of that one. Again, you get a little bit of a breakthrough, a little bit of a retest, and you get a nice little rally up here. Now, again, now it's breaking back through, might be coming back down to $16. So it kind of gives you an indication as to where you want to start. Again, this is not the end-all be-all for charting stocks. I'm not saying that at all. But basically, it just allows me to kind of see what the levels are looking like. And again, if the fib levels line up pretty nicely, that means it's going to have some more, confirmation that this might be a good support level. So, if it comes back down to 1450 around here, that might be really, really nice to see. Again, right now, it looks like it may be on the comeback down towards $16.28. If you want to then add more to it, what I also like to look at sometimes is momentum, and that's based on the exponential moving averages. So the three averages are the 200, the 9, and the 20. So right now, what I'm seeing from this perspective here, again, I just made these color-coded differently, is that the orange one is the 9-day is about to cross over the 20, which means that momentum short-term over 9 days compared to 20 is starting to die off. And when that dies off, you're going to probably see a continuation to the downside back to about $16 or so. The 200 is the longer term one. So if you see a nice little bounce off of the 200, you might see a nice little comeback up to the upside as a result. So that's kind of what I like to do here. Again, I don't do EMAs all the time, but it helps me to know what is going on. I can show you some more examples of how I chart things here. Toll Brothers has been a very, very good one for me in terms of my charting, because what you'll notice is that it broke through. It has this little consolidation here. It had a little bit of a support, broke up. Now it's coming back down to that $127 mark right here. So the only problem with that is that if it breaks 127, we might be looking at coming back down to 100, which I don't want it to do because I currently have a leap option in Toll Brothers, right? Kenview, same thing. Again, you take a look and see that, this was the most recent one that I put my fib level to here. But, around the $16-ish mark, give or take, kind of gives you that nice little window of opportunity saying, hey, anything you buy here, you're buying at 16. You then look to hopefully get out at about $19 or so. It's a pretty good return there as well. Another one that I did was Wendy's, but Wendy's right now is currently having some problems, which is totally fine. Again, I got into Wendy's around, when I started to see a little bit of a, potential V shape here. Still holding Wendy's right now, but now it's kind of showing that downward momentum still. So we need some sort of catalyst, get a little bit of rebound here. But I sold a $7 cash carry put on Wendy's as well. So if I get in at $7, that's no big deal. I'm getting in cheaper. My next level of support is down at 560, so it might be down a little bit still, but very, very similar ideas. And Stanley, same thing. Stanley's had a little bit of momentum, but it looks like the momentum's kind of died off a little bit. It kind of is below the 200-day moving average, which may not be good. Again, this market is crazy. It is volatile. Who knows what's going on here? But for the most part, it does do a pretty good job of following the levels here. Taking a look at these ones here, I had this purple one from a long time ago. It bounced off that purple one and then it retested the yellow one. Now it's back down to the blue one, which I drew out down there as a result of it. These are all things to kind of consider. Let me just actually adjust this one because I'm off on this one. There we go. But this is kind of the way you look at charting it, right? Start with drawing some fib levels and then kind of just go from there, It's one of those things where if you just draw it out, it allows you to see what it is that was going on here, right? For example, Kraft Heinz is another one that's been kind of getting absolutely slaughtered recently. And again, you can map your pullbacks however you want. It's your choice how you want to look at the pullbacks here. it's your preference where you think's a good pullback. Like you might say, oh, well, from, maybe from 65 down to here was a decent pullback. So maybe we can map that one out. And again, these are just examples to show you guys what I do. Again, you're not so required to do this way, but you can take a look. Just this one fib level. Oh, resistance was support. Now it's resistance down here at $37 or so. Okay, well, let's take a look at another one. Now it came back up to here. Nice little high there, and then it retraced back down to about 1582. All right, well, let's go back down into there and take a look and see. And you can see, again, consolidation period there and there and there, which is very, very nice. And then now we're kind of looking at, more of a recent downward swing here from probably around, 2024 down to about here. And again, these are just ones that I'm looking at and seeing. And now you can kind of see crap times is kind of at a critical support level in terms of the recent fib levels. And then you can go down to the daily chart and take a look and see what's going on in the dailies, right? And then you can go to the hourlies and take a look at this, right? Look at the purple one here. That's from a long time ago. Look at that. All that resistance there for you. Look at this nice little line up here. Again, support broke through, came back up. Again, now it's resistance. You got a big pullback here afterwards. So next stop, if we get a reversal on Kraft Heinz, next stop is about $30. So you can kind of time your entries that way as a result. You put on the EMAs if it helps you. It's still sort of a downward trend right now if you want to go about that way. When you see the 9 cross the 20 to get the upside, you might be looking at a better indication there. But that's kind of what my logic is. So just to get a little bit of a recap and some examples here, I don't go crazy with a lot of indicators and stuff. What I like to do, what I love to do, is just draw different fib levels on the weekly. You can do the monthly if you want to go even crazier. You're more than happy to do the monthlies for pullbacks if you want to. I do the weeklies, and then I go down to the dailies, and I can go down to the hourlies, kind of see what Kraft Heinz is doing or what any stocks are really doing. And it helps me to figure out how I want to enter into a position. Right. I did with United Parcels. And again, as you can see right now, United Parcels is consolidating around here. So maybe a good potential to go to the upside. And if it breaks 88, next stop's $100, you're looking at a very good return. A little over 10% upside, at least there. So this is the way I do it. It's nothing crazy. It's nice and clean. It's nice and simple. Again, you can look at the stocks that I do it for. All you got to do is you start off with, just any kind of chart, go to the weekly, and then you fib level out different pullbacks. And that's it. So you can do a pullback for Apple there. You can do a pullback for Apple there. You can do a pullback for Apple here. Wherever it is you feel like you want to do it, you're more than happy to do it that way. And this is what allows me to figure out what could be a good way to enter into my position. So thank you guys so much for watching today's video. I hope this gives you some insight of things. I love using Webull because it's in my brokerage account. The indicators, you don't have to pay for anything extra. They actually just added a new replay feature, which is very, very cool as well, kind of like what TradingView does. So if you have Webull, take a look at it. And again, start simple. Support, resistance, Fibonacci retracements. That's what I've been going with so far. And I use it to help kind of justify when I want to enter a position. Thank you guys so much for watching. If you made this far in the video, make sure that you like the video, subscribe to the channel, and turn on the bell notifications as per usual. I hope you're making money in the market in some way, shape, or form. And as always, I will catch you guys in the next video.